Hello, everyone. My name is Josh. I'm a professional day trader. It's what I do full time. And today we're going to react to The State of the AI Industry is Freaking Me Out by Hank Green. For context, I don't know anything about Hank Green, but this was sent to me and some questions were asked. I'm told that he's a science guy and he's worried about the AI bubble. That is what I know. So we're going to dive right in and we're going to make sure this is at least slightly sped up. And I'll give my reactions.
I love a good graphical representation of reality. Now, they're never perfect. There's always data that's being left out, but I'm going to talk today about one that contains a lot of information and took a little bit of time for me to parse. And once I did, it kind of terrified me. I'm going to show it to you as well. What a good little visualization we have on our hands here. How NVIDIA and OpenAI fuel the AI money machine. So very quickly, to explain, NVIDIA makes the chips that do the compute that creates the artificial intelligence systems. OpenAI is the biggest company that creates the systems that use those chips to create artificial intelligence systems that do stuff. Not just the chatbot, but also all of the other things that it does, including, Sora 2, which you've heard my opinion on. And then there's Microsoft. You've heard of them. AMD is another chip maker like NVIDIA, Oracle, and a few others in here like CoreWeave, possibly some others. I actually don't know what all these companies are. I think Nscale might be one as well, but it's the little dot. Oracle and CoreWeave, at least, are the companies that have built like the data centers, and they buy chips from NVIDIA and then they lease out the compute. They sell that. So basically, Intel and AMD and NVIDIA sell chips to the AI companies or to the data center companies, and then the data center companies sell the compute to the AI companies. Sometimes the middleman running the data center is there, sometimes it's not there. But in either case, NVIDIA is doing very well because so many people want their chips right now. But we can think of it.
He's already, as funny as this is to say, he already understands, even though there's some gaps, he already understands this better than most fund managers that I both talk to and listen to on live shows and podcasts. It's actually pretty hilarious. That little tidbit of information is already a step above what people even in an industry do for due diligence.
As like AI companies, chip companies, and then the middlemen compute companies. What the AI companies want is to be able to keep existing. Right now, OpenAI, worth $500 billion, has $12 billion of revenue. That's not profit. That's the amount of money they made total. Their profit is deeply in the negative. And NVIDIA has extremely high profit. They make way more money than they spend because people really want their chips right now, and so they'll pay way extra for them, and they're the best chips. They're the best chips. Crunch, 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 crunch. There's a huge amount of demand for those chips. The prices are way up. It's very good for NVIDIA. That's why they are the largest company in the world and are one company that is worth more than the entire pharmaceutical industry combined. But even then, even with their...
They have a larger market cap than most European countries' GDPs.
Absolutely bonkers margin that they have right now. Their price to earnings ratio is extremely high. So the value of all NVIDIA stock combined is much higher. Industry combined. But even then, even with their absolutely bonkers margin that they have right now, their price to earnings ratio is extremely high. So the value...
It's not really. I mean, historically speaking, it's kind of high. But when you're talking about the broad market, it's not especially high. It's actually come down quite a bit. Might sound odd as it approaches new highs, but it has a forward PDE of 28, which I don't know, for being the number one company in the world, that's not that big at all.
Of all NVIDIA stock combined is much higher than you would see with a normal company, which indicates to belief among investors that the prices of those chips will keep going up and the number of chips produced will keep going up. So NVIDIA desperately wants to keep the prices of their chips the same or higher. They want the demand to increase faster than supply, but they also want to increase supply dramatically so that they can sell more things. So like more sales and more profit equals more earnings. People who are sort of on the AI isn't a bubble train right now, what they're saying is, well, if it's a bubble, why are the prices of NVIDIA chips continuing to increase? There's a huge amount of demand there. People are buying them. That can't be entirely irrational. So keep that in mind. The demand for NVIDIA chips far outstrips the supply of NVIDIA chips. And the idea is that will continue to be the case even as supply increases. But first, quickly, the sponsor of this video...
I mean, that's not really a good summary of the bull case. Because the bull case wouldn't be, oh, they can keep... I mean, partly it is. Partly the bull case would be that NVIDIA basically has a monopoly within the industry. But already that's kind of deteriorating a little bit. Companies are creating partnerships with like Broadcom, and they're making partnerships with AMD, and AMD's closing the gap on hardware. It's not there yet, but they're still pretty far behind on software. CUDA program is, alpha, but the bull case would rather be that NVIDIA will continue to be the lead. They'll continue to make the next big chips, and then you're going to enter this new business cycle where every time NVIDIA makes a new groundbreaking chip, every few years or so, everyone's going to have to buy that to update all the cloud companies. And this will be the new cycle of the AI industry. And the bull case, really, it would be that, during the dot-com bubble, which she hasn't made reference to, but typically that's where people, naturally go on this topic. There was all this infrastructure created, but it wasn't being utilized because nothing was being done. Well, today, you can't find a single NVIDIA graphics card or chip that's not being used. They're all being used. Every single one of them is being put to work, to the extent that companies like CoreWeave even have a whole industry business of just renting them out to companies. And that's how Oracle is. Big headline that Oracle's margins are getting crushed because they're paying so much for these rentals. So he's kind of right, but he's not fully right. And you need to fully understand that to create a good argument. So we'll see how good his argument is without like a full understanding of the bull case. He looks like he did a good amount of research into the industry, but his bull case isn't a full understanding. And it goes deeper than that even.
To a recent fundraise, and OpenAI has $12 billion of revenue. It has no profit, and it is by far the largest AI company. And with this $12 billion of revenue, they are spending hundreds of billions of dollars on these chips. And OpenAI, I don't want to say
that's another error. OpenAI does not have hundreds of billions of dollars. OpenAI is doing some engineering in their financing and creating like share deals with companies and stuff. They have spent a good amount of money, but they don't actually have as much money as they are committing to spending, which would be the bear case. But it's important to understand that, a lot of these headlines about AIs, OpenAI is going to spend this, OpenAI is going to spend that. Like, they don't even have that money yet. It's a commitment in the future, on the assumption that they will have that money. Which right now is probably a fair assumption. They could always IPO and probably go to $1 trillion and then they'd have the money for sure.
that like they couldn't do more than they're doing right now, but they're not like brand new. They've been selling their services for a while. Now, could they increase the price of their services? Yes. Do they seem to think that that would be the thing that does it for them? No. Like, they're creating feeds inside of their systems. Now they've got a feed inside of ChatGPT where like when you open it, it's like, hey, just like read some stuff. Just read some stuff that I prepared for you. Instead of asking me questions, here's stuff that we think, based on what you've talked to me about before, you might be interested in. And the play there is obvious to me, which is they've said that they don't want to put ads inside of the experience of you just asking it questions, but they haven't said that they won't put ads inside of the stuff that it just provides to you. And if it's just providing stuff for me, maybe sometimes it will provide stuff for me that paid to be there. Also, maybe...
I mean, they could. It would be too obvious, though. People would catch on to it. They're more likely just to do ads. They say they won't. They said they wouldn't even do a adult chatbot, and they've already gone back on that. So pretty much anything Sam Altman says, you can just ignore, because if push comes to shove and he needs to generate more revenue, he'll immediately pivot on any of those things. Do not expect any CEO of any of these big tech companies to not do something that's going to boost their share price. Because honestly, that's their job. That's the title of their job. They're the fiduciary. They're supposed to generate value for shareholders. Okay, so it's the job of the government and other institutions to say, no, don't do that. No, stop it. But it's their job too. So I wouldn't put any, all this is just speculation at best.
Be like Sora's slop talk thing is also a thing where they could put ads, though I can't imagine that anyone thinks that there will actually be a lot of people who spend time on slop talk. But maybe, you never know, irrational exuberance and all that. And thus you have the other side of the argument, the people who say that this is probably a bubble. They're saying, okay, well, there's demand for OpenAI's services. People use them, they're using them more and more as time goes on. But you can't say that at the moment the demand is outstripping the supply. There's plenty of supply to meet the demand. And right now, OpenAI, according, I think, to them, they lose money every single time you use one of their products. Like, the amount that it costs to train and use the models is more than the amount that they are charging, even for their top $200 a month tier. In that case, it's possible that they could charge 10 times more to their enterprise clients and to their consumer clients, and all those people would keep paying, and they would be a profitable company. But Would that actually work? Like, would the $200 a month people pay $2,000 a month? But even more than that, is it true that the demand for NVIDIA's chips is increasing? Or is NVIDIA creating that demand? And likewise, is it true that the demand for OpenAI's services is increasing, or are they increasing that demand? So let's start with OpenAI. There's obviously a lot of arrows coming in and out of this. We're going to start with the ones that have green arrows. There's a healthcare company, Harvey AI, and AnySphere. These are companies that pay money to OpenAI, but that OpenAI's venture arm has also invested in. So they're investing in these companies, and then the companies buy services from OpenAI. That's a bit of a loop. Now, they're not investing like the exact same amount of money. Probably they're investing less than the companies are paying, but that is an example of like a circular system here. We also see these green arrows, which is venture capital, pointing out from NVIDIA to Mistral to Figure AI and to X.
I don't know. This is kind of like a there's definitely some knowledge gaps here. It's pretty normal for companies to create beneficial relationships with one another for their own survivability. To call something circular, there must be no benefit outside of that relationship. If it's a parasitic relationship, which would be a giant red flag of, potentially fraud, basically. What you're kind of implying is fraud. If you're talking about just a pure circular system, that is fraud. Like where you're creating revenue out of nowhere, out of thin air. And a lot of the revenue from each of these companies comes from one another, right? Which it has for years now. But again, this stuff is being utilized by companies all over the place. These data centers are making a ton of money because everyone's testing out this stuff. The bear case would be that everyone's speculating on how much compute they need. And so the bear case would be that you're overproducing the amount of compute necessary to actually run these services. And that would also be the bear case for energy, like all the money being put into building more data centers and all the money being put into the energy infrastructure to power those data centers. It's all being like overestimated, and it's turning into this euphoric bubble. And that will, once people realize what is the most efficient allocation of capital to spend towards these things, they'll find out we spent too much, and then you'll get like a period of a recession where that pulls back substantially. So, and the more advanced bear case of that would be all the energy that we're building right now that will take, here's the thing about calling this a bubble now is probably way too soon, because these data center builds are going to take a few years. They're already paid for and they're already happening. And that's going to be, generating lots of profits for construction companies and etc. And so you also have the energy side. People are dumping money into build, whether it's, renewable sources of energy or whether it's, nuclear or whatever. They're dumping all the money into those resources and creating all these partnerships, and all of that is already in the works and it's moving forward. Well, lots of these are contractual. So, if you're talking about building like a nuclear plant, you're talking about a 10-year process. Well, the money's already going there. So we're building it no matter what. What happens on the other side of that is probably where we find out that cost to run the AI systems outpaces the energy demand of them, and they become more efficient. And then we find out that we overbuilt the data centers and we overbuilt the energy, which is good for society. Cheaper energy is extremely deflationary. But that's probably the stronger bear case. This, what this argument is an argument that there's too much power and too much centralization of services to a few key companies, because they're all kind of turning into monopolies. And the other issue is that like all the antitrust laws that were built back in the day are being broken pretty much all over the place, where everyone, Microsoft has board members across almost in all the other AI companies or relationships with them. So they effectively, behind closed doors, control an effective monopoly. Basically like 3 companies have their hands in every single AI. So that's where I would be more worried at this moment in time. This Yeah, it's kind of concerning just because of the centralization, but is it an outright scam? No, it's probably just euphoria causing um, people to open up their wallets and spend too much because they don't really know how much they need and they don't want to fall behind. It's not as uh, conspiratorial as he's making it sound.
AI. And all of those people take that venture capital investment and then they buy NVIDIA chips. So if you're in the anti-bubble case, then you do have to ask, well, why does NVIDIA have to invest in these companies in order for them to buy their it's not like a quid pro quo here, but like, why can't the companies just get investment from elsewhere outside of NVIDIA to do?
So he realized it's not a quid pro quo. Okay, all right. Well, I kind of gave long explanation, but he understands
Those investments. It's a little weird, and I think that it makes sense that people are worried about it. Now, none of these arrows have dollar values on them, which is a little bit frustrating for me, except for the most important one, the one that sort of created this whole conversation about round tripping, which is this one. NVIDIA has agreed to invest up to $100 billion in OpenAI, and that investment comes along with the purchase of chips. So to unlock more and more of that investment, they have to buy more and more of the chips. That's basically paying OpenAI to buy NVIDIA chips. Now, it's not like the exact price of the chips. It's less than the price of the chips, so basically about a quarter of the money that the chips cost is getting discounted off the price of the chips, and in exchange, and I am simplifying here, but in exchange for that 25% discount, NVIDIA is getting ownership shares in OpenAI. At the same time as that is happening, with this money going to OpenAI, OpenAI signs a $300 billion deal with a middleman, Oracle, who's going to build the data centers and run the data centers. $300 billion on revenue of $12 billion for a company that is not brand new, that has been around, and that everybody knows about, and that lots of people use, and that lots of people have found a hard time figuring out how it integrates well into businesses in a way that is worth spending a lot of money. $12 billion. They have these huge contracts with lots of companies, but still $12 billion is the amount of revenue they have. They're spending $300 billion on a service contract. That's this darker blue line, a service contract with Oracle. So NVIDIA invests in OpenAI. OpenAI signs a service contract with Oracle. Oracle, in order to build this data center, has to spend tens of billions of dollars on chips. All these pink arrows going into NVIDIA, these are all these companies buying chips directly from NVIDIA. So they're all paying money into NVIDIA.
this is pretty normal though. Like if you wanted to secure, if it's super hard to get chips, okay, you have to sweeten the pot to make sure you're first in line, to make sure you can actually get your needs filled. And your OpenAI, you're the clear leader in the space. Grok is a far second. So, it benefits NVIDIA and it benefits NVIDIA's stock to say, we have ownership in OpenAI. We have ownership in the future of AI. And it benefits OpenAI to secure that supply chain, right? This is not, that parasitic relation. That's not even the right word. It's not a quid pro quo pro. It is just a beneficial relationship. This is historically, we have seen this for years. It's not really anything new. New industry, new storyline, same exchanges.
Which is why they're the ones who are winning the most in this. And also there's this one arrow pointing out of NVIDIA to CoreWeave, which is a service agreement saying NVIDIA will lease its own chips that are being sold to CoreWeave. So CoreWeave is buying chips from NVIDIA, and then NVIDIA has said, we promise that we're going to pay you to use those chips once they're in your data center. And not only that, they have promised that if CoreWeave, this data center company, if they don't get enough contracts to use all of the chips, NVIDIA will just take all of that excess processing power and pay for it. So they're guaranteeing the value of the chips to CoreWeave. Why would they be doing this if the demand for the chips is so high and the profit margin on the chips is so high? So the anti-bubble argument that I have heard from analysts.
Now that is the one thing that doesn't make sense. Not for that reason, but the reason would be the CoreWeave's business model makes no sense. It makes no sense why NVIDIA just doesn't do it themselves. So the argument could be that, I don't know, it's a goofy argument, but honestly, with the way things look right now, if NVIDIA wanted to bring in more revenue, they could wipe out CoreWeave's business model in 6 months and just do everything that CoreWeave does themselves. It's a very odd relationship, and maybe Jensen's got a friend that he really likes, or a few friends that he really likes that run CoreWeave, but that is a weird one. And that stock also has been trading really weird because people are starting to catch on to how weird it is. It's super overvalued, but they have this guaranteed deal with NVIDIA. But the thing is it doesn't really make sense for NVIDIA to not get into that space. But NVIDIA said they wouldn't, and they haven't. They've actually pulled back from getting to that space. Maybe because they don't want to spend the capital. They just want to focus on what they do. and they just want to let CoreWeave do that since it's such a beneficial relationship. But NVIDIA making that guarantee is also just it's a vote of confidence that we won't have to do this. Sure, we'll do that. That'll never happen, type of thing.
Who are much smarter than me and know more about this, is that the price keeps going up for these NVIDIA chips, and so they're like, the demand is there. But the chip isn't the product. The AI service to consumers is the product. And right now, that is an order of magnitude under the amount of money that is being spent just on hardware, not even including staff time and the power and the water and the...
Right, but you have to build these things to scale, because when you build them to scale, you get better. And so if you have the vision, you got to build it, and then you have to assume people will come. And these things are growing in demand. People are using them. I use AI every day. And when, Apple really kicks up, when Apple starts to solidify their partnership with OpenAI and integrate that with Siri, you're going to really start to see that hit another level. Or even the app integration within the GPT app will also be another level. We will start to see people probably start to utilize this on, a daily basis, because the entry into everyone will use this all the time is the advancements in the speech. When Alexa and Google Home came out, those things suck. They're abysmal. They're fun for like a week, and then you're like, okay, this thing is absolutely useless for anything other than alarm and a timer. And so like search stuff. But if it was a GPT that was running that, you could actually have a full conversation with it. It could organize your calendar. It can handle emails. It could be a little assistant, and it can actually do it really well. Because these things don't hallucinate much, especially when you train them on your own data. I have one that's trained on my trading data, and I feed it research. And when I ask it questions, we're talking 99.9% of the time, it doesn't hallucinate and it gets everything right. I still fact check it, but it's really good. It's almost never wrong. And if it is wrong, it's usually an error in how I phrase the prompts. So people are using it. The demand is kicking up. It is there. Look at companies like Palantir. They're doing amazing. On the commercial side, there's another AI company that has insane growth. Also insane market cap. That doesn't really make sense. But it's there. It's growing. So that's really where you kind of run into problems. Because it's pretty normal for, Amazon wasn't profitable for years and years and years and years. And you could have said the same thing. Well, no one's using it. Why are they investing so much in this delivery company? Because they're not making money. You got to get to a certain scale, and then the money starts flowing in. So you could have made the argument that eventually these services go to zero and they get commoditized, but we're far from that right now.
Buildings and all of that stuff. The amount of money being made by AI companies is an order of magnitude lower than just the money that is going to NVIDIA every year. And by doing deals that basically give companies money to buy NVIDIA's chips, they are selling their chips at an effective discount. And yet, at every one of these steps of the process, as this money flows around, these companies get more highly valued. When Oracle signed this $300 billion a year deal with OpenAI, their stock price shot up. When NVIDIA does venture investment in xAI, which then turns around and buys NVIDIA's chips, that is offering the chips at a discount. So once you parse this fairly information dense, though there could be more information on it and that would be good. But once you get your mind around this little graphic here, it doesn't seem like NVIDIA just thinks people are going to buy their chips at the prices they're selling them. NVIDIA seems to think, hey, it would be better for our share price if we found ways to artificially increase the demand for our chips, like by paying the people who buy our chips to buy our chips, or investing in companies that buy our chips so they can buy our chips. And NVIDIA has so much money that, like, what else are they going to do? The price is so inflated. Their stock is worth so much and they have so much money that they can subsidize the purchase of their own chips. And when they do that, the stock market rewards them. This money is just flowing around. And at the root of it is not the demand for NVIDIA chips, because NVIDIA chips are not the product being sold. The product being sold is artificial intelligence systems. Look, it might someday be this big, but it is not anywhere close to that big right now. And it's not brand new. In order for it to be this big, it has to create so much value. And we have to create new systems for capturing that value. Besides just...
So this is actually a really, 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 really common misconception. And it's a fundamental lack of understanding of really how GDP works. you don't have to really create value in the way of revenue as much as you need to create efficiency, well, which is another word for productivity. If you can increase productivity, if you can help companies cut out a third of their workforce for AI assistance, I mean, it's already happening. You know, college unemployment rates for new college grads is near an all time high, if not an all time high. It's like 15% right now, and then like 50% of them are underemployed, meaning that they took jobs that are well below the qualifications that they technically graduated with. And it's not just English majors and the social sciences. It's computer science majors that can't find entry level jobs because these entry level jobs can be done by AI. That productivity boost is something you cannot ignore, and it's actually a huge necessity, uh, given the dynamics that exist in like the U.S. economy, where you have this much larger generation that has growing needs, that is about to retire, and that needs to be paid for by a much smaller, younger generation. So for us to pay for that larger generation, with inflation and everything, the price of their needs is going parabolic. We have to be an order of magnitude more productive. So you can't just look at like revenue in, revenue out. It's a more dynamic conversation of like the productivity change that we have. Like 12 people can do this much work as, 1,000, because now we have all this AI doing all these automated systems. And then you hope that on the other side of that, you also create new jobs, that those people who were doing those jobs do other jobs. And it can be hard to, in the way he's conceptualizing it, to understand where that benefit is. But there's also real revenues being made right now. I mean, every major company is trying out AI, and Palantir, you can just look at their commercial growth, not the government contracts, but the actual commercial growth, doing really well, and everyone loves it. You're getting great feedback,
Firing everyone and having computers do all the work. Microsoft is the only major player on this graph that is buying NVIDIA chips that doesn't have a direct relationship. They do have this one little connection through Nebius, and I don't know what that is, where Microsoft is paying Nebius for a service while Nebius is getting investment from NVIDIA. By God, I don't know how big.
So Microsoft actually has their hands in every AI company. But you have to actually learn who the board members are and then what other boards they sit on. And then you start to realize where the real monopoly is. And they're breaking the law. I mean, Google's breaking the law. Microsoft's breaking the law. Who else is breaking the law? Salesforce is breaking the law. Yeah, there's a few other ones. But those are antitrust laws that are not being enforced right now whatsoever.
That is. You want to Google it with me? Oops. I don't want to show you all of my text messages. That was just my dad. That's probably okay. Don't read my text messages. Microsoft secures 100,000 NVIDIA GB300 chips via $33 billion deal. Okay, so it is big. That's actually huge. Oh my God. So Nebius is like an Oracle, but for just AI. I have gotten this take your guest house to the next level ad so many times. I probably accidentally clicked on it once and they're like, yeah, I bet you're interested in nanowalls. I thought it was going to be nanowalls, but it actually says nanowall. That's where you keep your Nana. She's in the walls. So yeah, it's getting 100,000 NVIDIA chips from a company that NVIDIA has invested in. Even Microsoft is getting discounted chips. I don't know, you guys. Seems fine. I have seen the simplified version of this pitched around, which is like NVIDIA gives $100 billion to OpenAI, OpenAI gives $100 billion to Oracle, Oracle gives $100 billion to NVIDIA. It's not exactly like that. It does prop up the demand for NVIDIA chips by making it so that you're giving money to people in exchange for them, in some cases directly, in exchange for them buying NVIDIA chips. Or you're just investing in companies so that they can buy NVIDIA chips. It just seems messy. It seems like bubble mechanics.
Apple, so like if you look at like Apple's supply chain, which is probably one of the most efficient supply chains in the world, Apple has made huge investments in their suppliers, which then generates them revenue, right? That's just one example of this, where the suppliers actually can't afford the goods, so Apple pays the fees and then ends up paying them for the products. So it's pretty normal to say, oh, if you can't afford this, I'm gonna help you succeed by giving you basically a loan. And that's probably not the best example, but there's other ones, especially like in the telecom era. So it's not really the most concerning thing. I don't want to call it a nothing burger because it can get concerning if you overbuild the infrastructure, like we talked about with the real bearish thesis. Not this one. This one's kind of a surface level take, even dug quite deep enough. But it's not really a big deal.
Mechanics to me, you got
At this moment, especially at this moment, none of this is, the real bearish case that I gave is a real issue that probably will come to fruition. But what are we, 3 years, 5 years away from that, maybe?
guys. So I am again just a guy. I don't know why. I gotta get back to talking about rare earths and fish. I gotta get back in my lane. That's what you want anyway. You don't want this. I should be talking about batteries and climate change and the moons of Saturn and my favorite fish. But instead, I looked at that figure for too long. Let's play connections. I'm worried because the last like 3 have been really easy. Swift Kite, those are birds. Robin is a bird. Oh, interesting. We've got like Batman Begins, Batman Forever, Batman Eternal, Batman Returns. Is that what it is? Is that Batman thing? We got Swift and Robin. Robin is also a Batman thing. There's gotta be, oh, Swallow. Great. Those are all birds. But Swift, Kite, and Swallow are much more similar to each other than Robin. Is there another bird like that? Robin is just
What is happening? What just happened?
a normal bird. Swift kites and swallows. Very similar birds. I don't know why. Wow, this is weird. Everlasting and permanent. Okay, well, we got that one now. This looks like it's going to be easy too. Everlasting, forever, permanent, and eternal. Okay. Launches, institutes, pioneers, begins. And that leaves us with returns, ending, pioneers, and days. Returns, ending, pioneers, and days. Okay, well, that does seem like what it is. And I don't mind doing it real fast. Kite, swallow, swift, robin. Those are all birds, and they're the only birds here. So I feel like that's it. This is like creates and puts into the world. Launches, institutes, pioneers, and begins. In addition to that, we've got things that go on forever. Eternal, forever, permanent, and everlasting. Which leaves us with, I think, days, returns, ending, and trails. Happy days, happy trails, happy returns, happy ending. Happy trails. That has 2 meanings now, but there's another one if you're just thinking of the one. And then these are all the same to me. Maybe the bird is second. Yeah, all right. And then I get 50-50 chance here. Everlasting, institutes, launches, begins, and pioneers. That seems a little bit harder. That was easy. That's another easy one. All right. I'm feeling it. Woo. Yeah, another 1 5. Okay, I don't know what's going on, you guys. But take it easy on us.
Ooh, is that like a thing he just does at the end of his videos? That was really weird. Okay. Yeah, I mean, overall, it's a 6 out of 10 take from a normie who's not in the industry and kind of learned about it from one chart. It's probably better than a take CoffeeZilla would give. But yeah, I mean, honestly, if you think you're an average person and you've got like this brilliant idea, keep in mind there's people like me who this is all they do every day. 12 hours of research, and they're actively trading, they actively have positions, and they will study them and do due diligence. If your thesis, if your bubble thesis or your short thesis or your stock thesis takes you less time to create than the time you allocate to shopping for a new pair of shoes, it's probably not that good. Just to be honest. It's probably something everyone else is already aware of. So keep that in mind. Oh, decent video though. He's entertaining. I like Hank. Good job, Hank.